Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. June is certainly shaping up to be an incredibly lucrative month, which has continued to present savvy traders with an endless flow of back-to-back profitable trading opportunities to capitalize on the short-term macro-driven volatility. The most highly anticipated FOMC meeting of 2022 and quite possibly the most monumental monetary policy decision in history of the Federal Reserve, that took place last week with the Fed announcing a supersized rate hike, declaring that it's essential to tame inflation. The Federal Reserve, they raised interest rates by 75 basis points, the biggest increase since 1994, and Fed Chairman Jerome Powell signaled yet another jumbo-sized hike next month. Over the last 12 months, inflation has spread to every corner of the economy, with primary cost of living expenses from food to fuel to rent, clothing and energy prices rising at double-digit annual rates for the first time since the early 1980s. US CPI data released earlier this month once again showed a further surge in those unavoidable areas of spending, with consumer price inflation rising at the fastest pace in 41 years. As policymakers very well know, the only surefire cure to stamp out inflation is recession. The only problem is central bankers have a well-documented history of going too far, as we all very well know from the unprecedented pandemic money printing spree. There's no denying that the Federal Reserve have fallen way behind the curve in tackling inflation and is now in a high-stakes race, trying desperately to catch up. Evidently panicked by high-sky inflation, the Fed is now stepping on the monetary policy brakes too hard, in much the same way that it's kept its foot on the accelerator for far too long last year. With inflation running out of control, the only plausible option left now is for the Federal Reserve to continue raising rates aggressively until policymakers break inflation. But this may also come at the risk of breaking the economy, and the Fed is not alone in this journey. We are now in a new era for central banks across the world, where lowering the record high inflation, that is their only objective, even if that comes at the cost of a recession. One day after the Federal Reserve's biggest interest rate hike in 30 years, many other central banks jumped on the rate hike bandwagon, scrambling desperately not to be left behind in what can only be described as a panic move, unleashing havoc across the financial markets. Last week, the Swiss National Bank made a surprise 50 basis points rate hike for the first time in 15 years, whilst the Bank of England, they moved rates to the highest level in 13 years as it anticipated inflation to hit 11% for the year. Elsewhere, the Reserve Bank of Australia equally surprised the markets with a 50 basis point hike, whilst the Reserve Bank of New Zealand and the Bank of Canada, they followed suit with their own 50 basis point rate hikes. Meanwhile, the European Central Bank, they called for an emergency meeting to reveal it will finally raise interest rates next month for the first time in a decade, in an aggressive bid to take on inflation running at an all-time record high. In total, more than 60 central banks faced with rapidly surging inflation, they have now joined the global race to hike rates aggressively, any cost necessary. This in return has increased the odds of a recession to 85%, with a long list of leading Wall Street banks predicting significant risk of recession by 2023. One reason why Wall Street is convinced that the new hawkish era in central bank monetary policy could bring on a recession is that it has already caused the asset bubbles it created last year to burst. Since the start of the year, global equity prices, they have fallen over 30%, foreign exchange markets have plummeted to multi-year lows, whilst cryptocurrencies have crashed the hardest, with Bitcoin down over 70%, whilst other tokens have lost over 95% of their value. Whilst all risky assets are now officially in a bear market, on the flip side, commodities across the board, from the metals to energies to soft commodities, they are now officially in a bull market, and only 18 months into a potentially decade-long commodity supercycle, according to Goldman Sachs. As everything from equities, cryptocurrencies to the FX markets continue to crash hard throughout this year, there's no denying that commodities, they have proven themselves to be the most reliable and stable asset class out there. This is incentivizing savvy traders to diversify their holdings into commodities commodities to maximize on the dual benefits of safety and high returns on offer in this new economic climate we now find ourselves in. Extraordinary times, they create extraordinary opportunities, and as traders, we are living in some of the most rewarding times ever in history. Right now, the commodity markets, they're moving in very predictable ranges, presenting savvy traders with a series of incredible week-to-week opportunities to capitalize on the short-term macro-driven volatility. Looking ahead, more big moves could be on the horizon next week, with Fed Chairman Jerome Powell back in the spotlight again. Jerome Powell is due to testify before Congress on Wednesday and Thursday in the wake of the US Central Bank's largest rate hike since 1994. Powell's comments, along with those of several other Fed officials, they will be closely scrutinized for fresh clues on the size of the next interest rate hike in July. As always, this major event has the potential to move the market significantly. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. So firstly, as we covered with you in detail with gold last week, we've yet again seen a 500-point slingshot move higher after a major news item. So the previous week we had the CPI data where gold shot up 500 points within 24 hours. Yet again this week after the FOMC statement, we saw another 500-point breakout to the upside. Both of these occasions we've been buying in at the lows. We took advantage on Thursday, banking into strength, more profits at 1,857 US dollars per ounce for actually over 500 points over 2 trades with our clients at the Gold and Silver Club on gold. And last week too, we banked over 2,100 points on natural gas within 2 days. So last week we banked over 2,500 points with our clients at the Gold and Silver Club. Just for that calculation, every 1 lot contract that you'll be trading, that's $25,000 of profit. Every 10 lot contract that you'll be trading, that's $250,000 of profit. That was just within 1 week, new trades that we had executed. So moving back to gold, feel free to go back and watch our reports from last week where we talked you through the buying opportunities ahead of the FOMC statement, especially given the sell-off that we had at the beginning of the week, giving you a massive opportunity to sniper in nice and low, accumulate right at the lower end of the channels before we subsequently had a 500-point breakout to the upside. And very much it is the name of the game right now that it's a trader's market. It's not buy and hold. You can see from the price action of the metals right now, they continue to ricochet between key levels of liquidity here, back down at the lower end of the ranges, then coming up and grabbing the swing highs, and yet again pulling back and just giving you multiple opportunities to keep coming in and out the market, generating profits week in and week out. Extremely lucrative. This is really a trader's paradise right now. This is exactly the sort of price action that we want to benefit day to day and week to week on these markets. It's the same situation of silver as well. Silver, we've seen multiple opportunities to keep buying once we get back down towards that 21 US dollar per ounce level. We keep bouncing from that zone, 100-point moves to the upside, quite quick moves again where you need to be very nimble on this market, look at opportunities on the sell-offs that we've had recently to sniper in, getting those lower trades on and then capitalizing on the subsequent bounces higher that we get after central bank news items. You can certainly see that with the price action here on Thursday through to Friday. Found support again at the 21 level with silver, which we discussed previously in our reports. These are the key levels right now. 1,800 for gold, $21 per ounce for silver. These are optimal zones for buying in recently where we've seen very quick impulse moves from those levels. Now moving over to the energies, as we mentioned with you, we banked over 2,000 points profit over 3 trades with our clients at the Gold and Silver Club last week. We had an 18% sell-off to the downside on Tuesday. We got in nice and low once the dust started to settle towards the end of the day, built into 3 trades there. Then we had the pop to the upside over an 800-point breakout on Wednesday through to Thursday. Again, we were in and out of this trade very quickly. Booked a windfall amount of profit over 3 trades, so over 2,000 points banked on natural gas just within 2 days there. And now we're flat again ahead of the weekend, looking for further opportunities to sniper in as we move into next week. It's very similar with energies here as well. This volatility is exactly what we need in this market. Week to week, we're seeing over 1,000-point ranges for energies right now, which very simply gives you the opportunity to swoop in at key areas of liquidity. We're looking right now at energies for opportunities if we were to get back down towards $100 per barrel or lower at those key areas for opportunities to yet again build further exposure. We still have 3 positions on crude oil, which we've got into. All of those trades are under $100 per barrel. We continue to bank into strength, scaling out as the price broke all the way out to 3-month highs, and now we're looking at opportunities to further add to that position on pullbacks, very much like natural gas. Because of the current market volatility, very quickly opportunities are opening up to sniper in and get in very fast profits on commodities, platinum and copper recently as well. So copper price action broke out to the upside on the 2nd of June on the Jubilee public holidays here in the UK. We caught over a 7% breakout in a week, 5% breakout in a single day there. So we banked a windfall amount of profit over 6 trades, scaled out of those positions, banking into strength. And very simply, within a week and a half, we pulled all the way back down towards the swing lows, key areas of liquidity, giving us an opportunity yet again to stack out the position at much, much lower prices. I would also keep platinum on the radar here as well as we go into next week. $900 per ounce or lower are certainly areas of interest here on platinum right now. We've capitalized multiple times on this range-bound volatility that we've been seeing all the way since April here, going into May, where we broke out above $1,030 per ounce 2 weeks later, and you can see 1,000-point pullback back down towards key areas of liquidity again, back at key support, back at the $900 per ounce level. If we were to get a move back below $900 per ounce, yet again, areas of interest for us to accumulate further exposure and sniper in at the lows. We are seeing one of the greatest wealth transfers ever in history in this new era of economic change which we find ourselves in right now, with rapidly surging global inflation, the cost of living rising, energy, gas and food bills all soaring. It's once again an important reminder that you can't just rely on one income stream. If your goal is financial freedom, then you need to start building multiple streams of income. The importance of having an essential income generating skill like trading, it's no longer a luxury, it's now a must-have necessity. In the words of Warren Buffett, the best investment you can make is in yourself. You can never lose when you invest in yourself and when you invest in new skills. If you want to upgrade your income, then you need to upgrade your skills, and there's no better skill than trading. If you want to maximize your money-making potential and thrive, not just survive in these highly macro-driven markets, then you need to adapt your strategy so that you can grow your income to a massive level. If you want to gain the ultimate edge to supercharge your wealth in these highly profitable markets, then you need to trade like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach. Having access to the right data at the right time is the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. Trading like every other misguided retail trader out there, using outdated technical analysis and gimmicky technical indicators will not work. We're no longer in the 1980s. We're in 2022 and the age of data. Every industry right now, including the trading and investment landscape, is being disrupted by data. In this day and age, if all you are doing is relying on outdated technical analysis and gimmicky technical indicators, then you're guaranteed to get crushed and chopped up in these markets when every other well-informed and well-educated trader out there is creating life-changing wealth. If you want to change your results, then you have to change your thinking. Never underestimate what you can achieve in the next few months from now with the right skills, knowledge and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP.